Welcome, curious investors, to the deep dive. Today, we're taking on a retail giant that, well, most of us know and probably love. Costco Wholesale, ticker symbol COST. Many of us have walked their aisles, right? Filling our carts with those bulk bargains. But what does this everyday retail experience truly mean for your investment portfolio?
It's a great question because, Costco isn't just another place to buy paper towels in bulk. It operates on a fundamentally unique business model. And for any American investor looking to make informed decisions, understanding these intricacies is absolutely key.
Exactly. So our mission today is to cut through all the noise, the financial data, news headlines, market trends, and really extract the most important insights specifically for you, our listener, an American investor keen on understanding what truly makes Costco tick as an investment. We've pulled together a pretty comprehensive stack of analysis looking at everything from their quarterly reports to, the broader economic wins. So let's unpack this. Okay, so for most people, Costco means incredible deals. We see the massive warehouses, the pallets stacked high, the low prices. But from an investment perspective, what is it fundamentally that makes Costco such a compelling business model?
Well, the real game changer here, the thing you absolutely have to grasp, is that Costco's true strength lies not just in selling products, but in its membership model. This isn't just like an added revenue stream. It creates this incredibly powerful economic moat.
A moat, like a castle.
Exactly. A durable competitive advantage that's just incredibly hard for others to replicate. Think of it this way. Their membership fees aren't just extra income. They effectively subsidize the incredibly low prices on the products. This lets Costco pass savings directly to you, the member.
Ah, I see. So the fee makes the low prices possible.
Precisely. It creates this self-reinforcing loop where the more members they have, the better prices they can offer, which attracts even more members. It's a virtuous cycle. Few retailers can replicate that. The company itself, formed from that 1976 Price Club and 1983 Costco merger, now operates hundreds of these huge warehouses globally, selling everything.
That's a powerful feedback loop. So what are the core features of this model that investors really need to zone in on?
Absolutely. Beyond that membership mode, there are a few core features driving their success. First, that membership fee revenue, as we just touched on, it's key. High margin revenue.
High margin meaning mostly profit.
Almost pure profit, yes. And because it's recurring, it acts as a buffer against the usual ups and downs of retail sales. It provides incredibly stable, predictable cash flow. Then there's the high volume, low margin approach on products. They buy massive quantities, operate super efficiently, and sell stuff at much lower markups than typical retailers.
Which they can do because of the membership fees covering costs.
Exactly. That's what drives their price competitiveness. Third, high inventory turnover. Because items sell so quickly at those low prices, their inventory moves fast.
So money isn't tied up sitting on shelves.
Right. A high capital efficiency. They're often selling products before they even have to pay their suppliers. That's a huge cash flow advantage. Fourth, that treasure hunt shopping experience. The random stuff in the middle aisles.
Oh yeah, the aisle of shame, as some call it.
Ah, right. It's actually a shrewd psychological play. The constantly changing limited time offers encourage repeat visits. You go for milk, you might leave with a kayak.
Guilty as charged.
It drives impulse buys and boosts sales per square foot. Fifth, global expansion. They've proven the model works outside the US, Canada, Mexico, Japan, Korea. And finally, its defensive characteristics. A big chunk of sales are essentials, groceries, household staples.
Making them more resilient if the economy slows down.
Definitely. People still need basics, and they often look for value during tough times. Costco offers that.
That picture of the treasure hunt really resonates. Makes sense why we keep going back. Okay, but how does this unique model translate into the actual financials? When an investor pulls up their reports, what should they really focus on?
That's the crucial next step, connecting the model to the numbers. Costco's revenue is basically split two ways. Product sales, low margin, high volume stuff like groceries, electronics, and membership fee revenue. And like we said, those fees are almost pure profit, significantly boosting operating income and cushioning any hits on product margins.
So looking at the numbers, what are the absolute must-watch financial indicators, especially, say, around now, mid-2025?
Right. For an American investor, especially looking at recent trends, maybe Q3, Q4 2025 estimates, here's what you watch. Net sales growth. Is the core business expanding? This comes from new members, sales growth in existing stores that's comparable sales, and new store openings. Second, membership fee revenue growth. That's the high margin engine. You want to see consistent growth driven by member count, renewal rates, and any fee increases.
We'll come back to fee increases, I bet.
Oh, definitely. Also, gross margin and operating income. Product margins are thin, sure, but the fees should ensure overall healthy margins and strong profits. Shows the strategy's working. Then, cash flow. Costco generates a ton of operating cash flow. Vital. It lets them reinvest, pay regular dividends, and famously issue those big special dividends.
Ah, yes, the special dividends, they sweeten the pot.
They really do. Also, comparable sales growth, often called comps, shows growth in stores open at least a year, including e-commerce, tells you if the existing stores are healthy. And finally, perhaps the single most important metric, the membership renewal rate. Consistently over 90%. It's incredible. Signifies intense customer loyalty and a super stable revenue base. If that number ever started to seriously dip, that would be a major red flag for investors.
Over 90% is just, wow, almost unheard of. Okay, speaking of those high margin fees, you mentioned the potential for an increase. How does that factor into earnings analysis right now?
That's a critical point, especially around July 2025. When looking at earnings, yes, you check if sales and EPS beat expectations. You look at the comp sales details, U.S. versus international e-commerce growth. You check member count and that high renewal rate. But the big discussion point, the potential catalyst, is the membership fee increase. Historically, they raise fees every 5, maybe 6 years.
And the timing might be about right.
The timing is definitely making people talk. An increase flows almost directly to the bottom line, significantly boosting net income. It usually gives the stock a nice bump. So any news or even hints about that are watched very, very closely. And of course, their guidance, the company's outlook for future quarters, sets the bar for performance.
Okay, so with all these unique financial strengths, this strong model, what does it mean for valuation? If someone's looking to buy shares, how is Costco typically valued? And let's talk more about those dividends.
Right, valuation. Costco often trades at a premium compared to other retailers. And it makes sense because of that stability and predictable earnings from the memberships.
Yeah.
So it's PER, the price to earnings ratio, usually higher than competitors. Investors pay more per dollar of earnings because those earnings are seen as more reliable.
Makes sense. What about price to sales?
The PSR, price to sales ratio, can actually be relatively lower because the sales volume is just enormous, even if the profit margin on each item sold is thin. So investors are often valuing the huge scale and efficiency. And people also look at EV to enterprise value to earnings before interest, taxes, depreciation, and amortization. Gives a good sense of cash generation ability.
And shareholder returns, is it mostly about growth or is there income appeal too?
It's a mix, which is appealing. They have regular dividends, and those have steadily increased over time. Shows commitment to shareholders. But the really unique part, the thing that gets a lot of attention, is their history of large, periodic special dividends.
Right, using that accumulated cash.
Exactly. It's how they return excess cash, making them very attractive for long-term investors, including those focused on income. That's a big part of their value proposition.
That really explains the draw for many investors. Okay, beyond the regular reports and metrics, what are the big news items or broader economic factors that tend to move Costco stock? What should investors keep an eye on?
Sure. Several things consistently act as catalysts or influences. Earnings announcements, obviously, especially those key numbers. Membership fees, renewal rates, comparable sales, misses or beats there can cause big moves. Membership fee increase news, as we discussed, almost always positive for the stock, given the profit impact. Special dividend announcements. Historically, these are major positive catalysts. People often buy in anticipation or reaction.
Makes sense. What about broader factors?
Consumer sentiment and spending trends are huge. Is the consumer feeling confident? Are they spending? Costco often does well when people seek value. Inflation and raw material costs are tricky. The low-price model helps attract customers during inflation, but rising costs for goods, transport, labor that can squeeze their already thin product margins. The membership fees help buffer this, though.
Right, the buffer again.
Yeah. Then there's competitor dynamics. What's Sam's Club doing? BJ's. Even Amazon Prime, it's a different model, but competes for that membership value customer. Any shifts in market share matter. Also, new store openings and global expansion, especially into big markets like China, shows growth runway. Their online business growth strategy, how are they improving e-commerce and delivery for bulky items? Shows adaptability. And finally, market sentiment. Costco is often seen as a defensive stock.
Meaning safer in uncertain times.
Exactly. Or an inflation hedge because of its value focus. Institutional investors often favor its stability. So broader market fear or confidence can impact how it's perceived and valued.
Okay, that's a lot of potential positives. But no investment is risk-free. What are the key downsides or risks investors absolutely need to be mindful of with Costco?
You're right, absolutely crucial to consider the risks, even with a strong company like Costco. First, there's potential consumer resistance to membership fee increases. We talked about how vital they are. But if they push too hard or raise fees at a bad time, could it hurt renewal rates? Or slow down new signups? It's a balancing act.
They haven't really seen that yet, but it's a theoretical risk.
It's something to watch. Second, intense competition. Sam's Club, backed by Walmart, is always there. They compete fiercely on price. And online retailers, especially Amazon Prime, it offers convenience and a huge selection, challenging Costco's own online efforts. Plus, traditional supermarkets like Kroger or Albertsons compete hard on groceries.
So pressure from multiple angles.
Definitely. Third, inflation and cost increases. We mentioned this as an influence, but it's also a risk. If costs rise too much, can they maintain low prices without crushing their product margins? It puts pressure on their model. Fourth, global expansion risks. Entering new countries isn't easy. Understanding local tastes, regulations, and currency fluctuations. A strong dollar, for instance, means profits earned overseas are worth less when brought back to the U.S.
Okay.
Fifth, the limitations of their online business. Selling bulk items online is expensive to ship, and replicating that treasure hunt feeling online, difficult. E-commerce might not be as profitable for them as it is for others. And finally, maybe a bit nuanced, but an over-reliance on low-margin groceries. If competition gets even tougher just in groceries, it could drag down overall profitability if they can't offset it elsewhere.
So despite these risks, they seem to navigate them well. What are the internal strengths that keep Costco so resilient and successful, beyond just the numbers?
Right, it's not just the model on paper. How do they execute? Some investors might look at technical analysis briefly. Charts, moving averages, RSI, MCD, things that gauge market sentiment and short-term trends.
Like support and resistance levels.
Yeah, exactly. But honestly, for a company like Costco, fundamentals tend to drive the bus. An earnings report or news about a fee hike can blow right through technical signals. What really matters are their internal capabilities. First, management's leadership and culture. Their unwavering focus on member value and keeping prices low is baked into the company DNA. It's consistent. Second, member management and loyalty. Keeping that renewal rate above 90% isn't luck. It's delivering on quality, price, service, and that unique shopping experience.
The treasure hunt factor again.
It keeps people coming back. Third, their supply chain prowess. They have immense buying power. They negotiate hard, source efficiently, and manage inventory incredibly well. And their Kirkland signature private brand, hugely successful and profitable. Fourth, their evolving omni-channel strategy, integrating online with in-store pickup, figuring out delivery for big items. They're adapting. And finally, underpinning it all, financial health. That strong cash flow funds everything: reinvestment, growth, and those generous shareholder returns, especially the special dividends. It gives them flexibility and strength.
Okay, so after this really comprehensive deep dive into Costco's model, the financials, the catalysts, the risks, the strengths, what's the final word for our listeners, the American investor? What should they really take away?
Well, what's really clear is that Costco, with that powerful membership moat, its incredible operational efficiency, and that deep commitment to member value, it remains a fundamentally strong and, I think, attractive company for your portfolio. That super high member renewal rate, the periodic special dividends, those are major draws, especially if you're looking for stability and reliable cash flow in an investment. And it really does tend to act as a defensive stock, holding up relatively well when the economy gets shaky.
But not without things to keep an eye on.
Absolutely. Investors should continuously monitor how Costco navigates any potential pushback on future membership fee hikes. The market's reaction to the next increase will be very telling. Also, keep watching how they manage those inflation-driven cost pressures on product margins and how effectively they grow their online business against really tough competition. It's a fascinating story of consistent value meeting smart strategy. For an investor, understanding these layers, that's what helps turn information into real insight.
It certainly is compelling. There's always more to learn, and that's what the deep dive is all about. We hope this is giving you some valuable insights for your own investment journey.
Came Blick.
Oh.